Welcome back, Alejandro. Thanks so much for going over Nike stock with us today. And we hope that the audience is enjoying what we're doing. If you appreciate the investing insights that Alejandro shares, please give this video a like and subscribe if you want to keep learning more with us. So with that, Alejandro, please take it away.
Hello, Michelle. Hello, everybody. As I always say, it's a pleasure being here with you. Yeah, as you said, we really hope you guys are learning. We love this, and hopefully we are bringing something to you as knowledge. So let's get started with Nike. So Nike is a very well-known company. It has very interesting things that we're gonna talk about. Right here we see the Air Jordan, one of the most important brands all around sports. So let's get started. So what Nike does, they design, develop, market, sell of athletic footwear, apparel, equipment, and services. We can see here three of the most iconic legends in sports: Tiger Woods in golf, Roger Federer in tennis, Michael Jordan. Are you a fan of any of them, Michelle?
Oh yeah, like Roger Federer is the best tennis player of all time, in my opinion. So Michael Jordan was cool. I remember watching Space Jam, and like there's some of the greats.
Yeah, absolutely. So to me, this is part of their secret sauce, which I will talk about a little later in the video. So important facts about Nike. It is the largest seller of athletic footwear and apparel in the world, which obviously, when you're the largest is great, but at the same time, when you're the largest is the hardest to grow, because obviously if you have 60% of the market, I mean, growing 10% is getting 66% of the overall market. But if you have 1% and you double your market, you just have 2% of the entire market. So this is great from a scale perspective, but obviously it makes it as a lag, because I mean, it is very hard for them to take market from the little guys sometimes. The different distribution channels: Nike owned retail stores, Nike digital platforms, independent distributors, licensing and sales representatives. Obviously, the latest years, they've been trying to go a lot of digital, trying to go D2C, direct to consumer, trying to jump many of the retail shops that they have. Obviously, it's more, the customer has a better experience just because you are connected directly to him, but at the same time, it's more profitable. Footwear and apparel products are manufactured outside the US. In the other side, equipment products are manufactured abroad and in the US. Footwear, as we're going to see later, is the most important part of Nike. This reminds me a little of Dexter's shoes when Buffett bought it, and he always talks about how it was one of the worst mistakes in his life, and it was because he thought even that they produced it, the Dexter shoes here, they were going to be able to, just because of the brand, they were going to be able to keep competing. But as even the master makes mistakes. Other brands are Jordan brand and Converse. I mean, obviously Jordan is based on Michael Jordan. And they also, to complement, offer fitness, activity apps, sport, wellness content, complementing their brand value. So I mean, I think they're trying to build something like Apple's in a certain way, because I mean, you join their app, you're doing their fitness activities, and all that starts to like connecting and becoming part of your fitness routine.
Yeah, like an ecosystem.
Absolutely, yeah. That's what I think they're doing. So how they make money, as I said before, footwear is, as we see, almost 67% of their overall sales. Apparel is like 25%, and equipment is just small market. They also own Converse, which is another important brand. It's funny because when Nike started, Converse was this huge thing, and now they're just a little part of Nike.
Yeah.
So here's the division between the wholesale customers and direct to consumer. As we see that, and I said before, that direct to consumer is growing. The wholesale is still growing, but is lowering compared to the growth of the direct to consumer. And as I said before, the customer gets a better experience, the customers get more connected, they can market directly to them. So a lot of advantages with this. Here we see a graph that really blew my mind. I mean, and in the footwear industry, if you add Adidas, Skechers, Puma, and ASIC, almost adding everybody else is about what Nike sells, which is just crazy. But as
Yeah.
I said, yeah, I mean, did you knew this? I mean, this is
No, I mean,
it is
I knew Nike was huge, but I didn't know they dwarfed even Adidas and Puma and all those like the other competitors. I mean, it makes sense though, because Nike is so dominant with the popularity of basketball shoes, and so many people are willing to wait on lines for these really special shoes, and like it's not like any other. So it's almost like Apple and maybe Samsung is like Adidas.
Yeah, absolutely. I just think that the share of mind that they have and that connection to the customer is just crazy. So by that segment of the population, they have about 20 billion in sales to men. Women is a little less than half. Kids is 5 billion. And Jordan Brand, as I said at the beginning, is just crazy. I mean, they sell 6.5 billion in Jordan Brand shoes. And as we can see, is the biggest grower. I mean, is the brand that has grown the most. So again, I mean, I'm not 100% sure when Jordan retired, but it's just amazing how much brand he has created and how it's like being able to explode it so much. And I don't know if you were able to have the chance to see the movie Air. I mean, it was a pretty cool movie, and you talk about how special they were able to make Jordan for
Yeah,
Nike.
not yet, but I think anyone who may be interested in investing in Nike, they should probably watch that and see, what they can understand about the business and the power of these brands and how much Michael Jordan's legacy continues to influence the brand marketing on, make Nike more successful.
Yeah, totally agree with that because I mean, it's just crazy how just a person can influence so much in the mind of a lot of people. And this just makes me remind me of a little story. When I was little, there was like this golfer that were Tommy Hilfiger, and I fall in love with that brand. I mean, it wasn't Nike at that moment, but it was Tommy Hilfiger. But it does influence your mind, and especially when you're a kid, and when they get your attention since you are a kid. I mean, you many times get them for life, so it's like that recurring revenue.
Yeah, absolutely. Just like Disney, the power of Disney, and people who are adults and have their own kids, they love going to Disney as an adult.
Yeah, absolutely. That is a good comparison.
Hmm.
So here a little the stores, around 35% of their own stores are in the US and 65% are outside the States. Right here is the income statement. And as we see, they've been growing. I mean, since 2021 to 2023, they grow 7 billion, which is a lot. But as we can see also, compare 2022 to 2023, the cost of sales grew a lot. So they are less profitable this year, even though they sold more. And obviously, I mean, that is related to inflation, cost of transportation, cost of, I mean, a lot of expenses that they incur too. And down, I put the demand creation expense, which to me is something kind of the secret sauce of Nike, because even though they spend 4 billion, that just an hypothesis, they didn't spend anything on marketing, they will make, instead of 5 billion, 9 billion, which obviously is not the case. But what this says is that for every $100, for example, that they sell, they're spending $8 back to build and to keep connecting to their customers. Even though, I mean, they are so big, but still we see that discipline to understand that this is how they keep influencing the head of their customers. So to me, it's pretty crazy. in this next slide, I put some of the biggest. I put it per year. Obviously, like most of these contracts were for 10 or 5 years, but it was per year, and they spent 60 million in Michael Jordan, Rory McIlroy, which that was a pretty big surprise. I mean, he's a golfer, and he even had more than Tiger. But if you add all this up, I mean, it's almost 300 million in spent in a year in just players of different games. I mean, it's just crazy. But at the same time, this is what I think gets into the mind of the little kid, the new golfer, the new tennis player. I mean, just wearing the Nike and, oh, this is the one that Roger Federer wears for tennis, or maybe, I mean, obviously for Jordan, I mean, oh, wearing the same shoes that he wears is something very special, which makes it a brand that doesn't have to compete with price. And I mean, this is obviously what we're looking for, because competing on price is good only, as Buffett always says, if you are the low cost producer, but you don't want to compete in price in any other reason, just because it will become a marketing of who can sell less. And what I noticed from Nike, and I would like obviously your opinion, Michelle, is that a lot of brands, sports or others, they spend a lot on promotions, on marketing, but their expense is like, come, for example, in restaurants, come today and pay $20 and get 2 plates. But what I noticed from Nike is that they don't really spend the money that way. They spend the money just making the brand special, making sure to the people that is wearing Nike, they are special. They can do everything, just like they're just do it a little logo.
Yeah.
So that part to me of Nike is very, very interesting to apply to any business. And yeah, what is your opinion on that, Michelle?
Yeah, and I think they make all of this aspirational brand in that, you know, they might not offer the most discounts, unlike some other brands that maybe you can get, you know, a lot more percentage off, because usually if you go to a Dick's Sporting Goods store, a lot of the times the Nike stuff is not as on sale as other stuff. So the interesting thing is they're able to maintain that mind share without having to give steep discounts on their inventory. So I feel like that's kind of an interesting advantage that they seem to have over their competitors, because they don't need to, you know, lower prices in order to compete. They're able to, kind of like other entities that people rely and trust on them to be able to provide. Like, I'm trying to think of what might be a retailer that is in a similar position where, even though you might be spending a little bit more, but you get like a certain kind of quality or a certain brand associated with it, and people are willing to spend that money. Like, maybe the one that might come to mind is maybe Whole Foods, where, you know, maybe you can get basically the same seltzer water anywhere, like in some other grocery store, but people are willing to spend more at Whole Foods because they might have this certain feeling that they get when they go to Whole Foods, and that might be a similar feeling that people get, that you can get any sneaker, but when you get a Nike sneaker, it gives you a certain feeling, and that's pretty powerful that they have that kind of advantage.
Yeah, absolutely. I just think they have worked that brand so well that it's just, I mean, it is great to learn and try to understand. And maybe if you have your own business or your own venture, I mean, this is to me one of the biggest lessons from Nike.
And when the secret sauce thing, so are they paying with these sports players, these athletes, are they paying them every year this amount of money to use their image and likeness and media, you know, to kind of promote their goods? Is that what, like, these are like sponsorships?
Yeah, so basically, I mean, this is not like this was last year or anything. This is just I took the biggest sporting deals that Nike has done through the years, and I just put it per year, per player, just because, just to put it in a graph that we can understand. But I mean, like, for example, Tiger's contract, I think it was like 10 years ago. Obviously, Jordan, I mean, I'm not sure if, I mean, they probably pay him today royalties from the Jordan brand, but I mean, he's not playing, so I don't think they pay him anymore. So basically, this is just contract that did through the year. So for example, I think Jordan's contract was 600 million for 10 years, and Rafa Nadal was 50 million for 5 years. But I just wanted to put it in a yearly thing. Sharapova, for example, I think retired a long time ago as well. So.
Yeah. Okay, cool. Yeah, I mean, that's pretty fascinating how much, the brand in these expenses of marketing, it's like you still need to keep it up. Like let's say they stop using some of these people's pictures and when they're doing some promotions, then maybe people would forget. Like if you never include some of the athletes that people grew up with or that they have a lot of admiration for, they'll forget about it. Just like maybe how Berkshire is always advertising Geico, and the same with the other insurance companies. Like they need to always put their logo and their product out there so that you remember, when you need to get some new insurance, maybe that might help you remember, oh, Geico, I saw a commercial about that. Maybe I should call them. Like it's like these nudges that these companies are doing so they get you to buy into their product or service.
Absolutely. And to complement with you, something Buffett always says is like, it is really important to advertise, but advertise something worth it. Just because, like, for example, Geico is advertising, like they always say, I think like 70% of the cases, they offer the lowest possible insurance for that market. I mean, Nike is advertising, as you said, a aspirational brand. So marketing is very important, but obviously it has to go followed by like a story, something that makes sense, which I think is very important. Because I mean, for example, that's people say, I don't know, a restaurant comes, I always talk about restaurant just because I was in that industry, but they always say, oh, come here and eat the best food. Yeah, but I mean, who can prove it's the best food?
Yeah.
I mean, unless you have that big story, and like Nike or Geico or Apple, like the Rebels and that type of thing.
Right. Yeah, that's true. Yeah, I mean, it's so funny when you see like the #1 burger place, and it's like, who said that this was the #1 burger place?
Yeah, so that type of marketing, I mean, you might get some people, but I think it has to be like really fundamentally right, get the real story, and a lot of, like Buffett says, something worth advertising.
Yeah, makes sense.
Oh, oh no, what the heck? Sorry.
Yeah, no worries.
Okay, sales by region and profitability. So North America, as we will guess, is the most important market. Europe, Middle East, and Africa are pretty important. I mean, they do 13 billion. Greater China, as an independent country, obviously the second. But what's interesting is that they decreased its sales last year, which is pretty crazy. But obviously, with what's going on over there, I guess it makes a little sense. Here again is a little the division, and this presentation has a lot of numbers, but I just think to understand a company and to be able to value, I just think the more numbers you are able to get, the better, because it's the way, I mean, that you can project the more precise how it's going to look in 10, 20 years, which is what are we always trying to do as investors.
Yeah. And what stands out to you from, say, looking at the revenues? How does it help you when you're trying to project out like where this company might be in 10, 20 years?
Well, obviously I try to see the last 5 years, and obviously you have to look at the competitors. I mean, it helps me just because when I'm doing like a deep analysis, obviously, I mean, it's way longer than what we can do in half hour, but I obviously will open Adidas, Puma, Skechers, look how they compare, look their margins, because something I find lately and realize is very important is to see, for example, how much are they able to raise the prices without lowering their their sales, which obviously, I mean, it comes from Buffett. He always talks about that.
Mm-hmm.
And revenue obviously always helps, but you have to understand how is that revenue becoming. And for example, I was checking at the Nike cash flow, and you see that depreciation and additions to property, plant, and equipment is similar, which means they are growing sales without really having to spend or opening more places, which is obviously a great sign. Because let's say you see company X making 10 million, and then 5 years later they're making 100 million, and you think, oh wow, it's great, but how much have they spent to get to that 100 million, which is
Mm-hmm.
something you really need to look into it, because it's not really about growing, it's really about growing profitably.
Yeah, for sure.
Okay, here's that debt. I mean, I just think I put it in the last time we talked, and I just think I'm so jealous of this debt. Can you imagine having money lent to you for 338 and you have to pay on 2050? I mean, this is just crazy. So I just think that the structure of their debt is just beautiful. I mean, it's a weird word to use in a financial analysis, but it
Wow.
obviously, I mean, just you see that structure. I mean, it's just in the years, I mean, they don't really have to pay much in the next coming years, and the rate is so low, which is something, again, I always advise everybody to do, because a lot of people say, oh, I like companies with no debt. But honestly, if you are able to make that debt profitable, if you are paying 3% on your money and you're making 20% return on that invested capital, you are 17% over. So, I mean, is that bad? Obviously not.
Yeah,
If,
and it seems manageable. Like unlike when we talked about Domino's, Domino's seemed to have a really huge debt load that seemed hard to service. Whereas if we put this in perspective, does it seem like Nike is able to service their debt load going out to 27 years?
oh yeah, absolutely. I mean, just look how low their payments are. I mean, it's like in a, well, they already probably paid this May 1st, 2023 was only 500 million, and they are making around 6 billion. So I mean, what they have to pay next year is probably 1/7 of what they make, and this grows. And as we see, I mean, they might refinance, but as we see, until 2030 they owe only like 6 billion. So basically in the next 7 years, they just, with 1 year of, I mean, if they decided to put everything into that, I mean, they could pay the next 6 years, and then they have 10 years to pay the next billion. So I just think it's amazing how well it's structured.
Mm-hmm. Cool. Yeah, and that's
Yeah.
good. A great example to look for. It seems like maybe Nike could be a textbook example of how companies maybe should manage debt. And I mean, I'm not a CFO, so I don't know exactly what's the best standard, but this is looking like, compared to some other things that we've talked about, this is looking like in a pretty strong position compared to, say, like, I think both Domino's and Disney might have struggled with some debt, right?
Yeah, I think Domino's was very tight, and I think they had to refinance pretty quick. So I mean, that was bad. I think Disney, yeah, you're right. Disney had a really big debt, especially after they bought the
Mm-hmm.
Fox News that we talk about.
Mm-hmm.
Okay, so lessons that I learned from Nike: tell the story of your brand, get that emotional connection with your customers. That way you don't have to compete in price, which I mean, I think is something really important for any service product that you sell. Try to reach the unconscious part of your customer with associations, sponsorships. And what I mean by that is that obviously we are aware of certain things, but there's been studies, for example, that they serve the same burger in a location, One is in a really clean place, the other one is in a filthy place.
Mm-hmm.
And obviously, as you will guess, the same burger in a clean place is going to taste better than the one in the filthy place. And the reason is so much of our decisions come from the unconscious part that it is very important to always try to reach to the unconscious of your customer.
Mm-hmm. Cool. Yeah, that's a great insight. Thank you for sharing that.
Yeah. Yeah, that is fascinating, the psychology of how we decide the buys and all this.
Oh, yeah.
And lastly, the questions I always like to leave for people to, in case they like our presentation, maybe they get interested in Nike. Again, as we always said, this is not market advice, it's just information because we love this subject. And yeah, I always like to leave the question mark so people can ask if they decided to invest, who is Nike's strongest competitor? Will Nike be able to keep its market share? Is the quality of Nike shoes better than competitors that sell at much lower prices? How much of Nike's success is related to their advertising? So obviously, again, I'm not going to answer, and the important part is again, as I said before, if you're interested in this company, I think there are good questions to ask yourself, and that will
Yeah.
help you to predict with more certainty of how this. I think it is an amazing company, and we didn't talk about the stock, but I think 1 year ago it was in $150, and today is less than 100. So at least if you think it's interesting, it is a good time to at least look at it and try to value and get to a
Mm-hmm.
conclusion.
Yeah, it makes me wonder, when you see like really strong companies and their stock price is going down, sometimes they could be going through some temporary event that, maybe the market is reallocating out of certain sectors, maybe the retail sector overall with a lot of inventory turnover or supply chain issues, like they're trying to move around, maybe that's hampering some growth for some retail, but maybe it's not affecting everyone, but even when Nike is in a basket with, say, other retail companies and an ETF, maybe they get sold off because pension funds or other funds are all selling the retail industry, and maybe they're throwing out the baby with the bathwater in terms of Nike is really respectable and a very strong company, like we've talked about. So it's interesting to try to figure out, why could the market be, for now, treating this company in a certain way. And you see that happen with all kinds of other really good companies like Apple and Berkshire. Like every now and then, the stock market price will go down also. So you just have to figure out kind of what's going on here, and whether what we're seeing happening to some of these companies, is it a permanent change or a temporary change that maybe, stock prices could go up and down, but if there's a trend as to why it's kind of going down, and does that mean the business itself is in decline, or is it just a temporary blip, and then there's volatility like all the time, so maybe it will come back? So those are also questions that people have to ask themselves, right?
Absolutely. As you said, it's just very important to ask that type of questions to get to a conclusion. But definitely, as I always say, when the stock goes down, and all it is for us, if we are not in and we think it's an interesting company, it's just opportunities for us as investors, not
Yeah.
like everybody sees it. And as Buffett says, if you're buying and the price goes down, the better for you, because you can buy more.
Yeah, absolutely. Well, with that, thank you so much, Alejandro, for sharing all your knowledge and insights into Nike. And I think this was a great learning lesson. Even though I haven't studied Nike that much, I think I got a lot out of this video. So I hope our audience did as well. And I hope you have a good rest of your day.
Same to you, Michelle, and thanks again for the invite. Hopefully I see you again.
Oh, yeah, for sure. Till next time. Bye.